We told you recently about the Dallas-Fort Worth apartment market performing better than expected in fourth quarter, and another one that falls into that category is Atlanta. Of course, though, this one still has a lot of issues. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Atlanta update. Apartment demand in fourth quarter was surprisingly strong. Take a look at some numbers here. 2,150 units absorbed during a period that is typically weak. We usually see net move-outs in the last 3 months of the year. This is one of the best Q4 performances Atlanta has seen over the past decade. And in 2011 overall, Atlanta absorbed 8,470 units. That is a little bit below the nearly 11,000 units absorbed in 2010, but still solid, especially when you look at how far new supply levels have dropped off. Just 2,890 units completing in Atlanta in 2011. That is the smallest volume completed here in any calendar year since 1993. And that means occupancy rates are climbing, up 40 basis points in fourth quarter and up 140 basis points year over year, now at a rate of 91.3%. So that is still one of the weakest rates in the country. And because of that, rent growth levels have been pretty weak, not surprisingly. Same-store rents up just 0.4% in Q4 and up 2.4% year over year. That is well below the U.S. average of 4.7% growth in 2011. And while most markets have now returned to their pre-recession average rent levels, Atlanta's a market where there's still a hole of 4.5%. Now let's zoom in and take a look at what's happening on a submarket level, and we're going to see two entirely different stories. We've talked about this a little bit before. One inside the perimeter and one outside of it. Let's look at occupancy rates. Here are the top 3 submarkets in terms of occupancy as of year-end 2011. Intown, Midtown at 95.8%, Northwest Atlanta 95.6%, and Buckhead 95.5%. There's your urban core, and not coincidentally, these are the 3 most expensive submarkets in terms of average rental rates, and they're all fully recovered in terms of occupancy. And almost everywhere else, occupancy rates are terrible. Here are the bottom 5, all below 90%. West Cobb County, West DeKalb County, East DeKalb County, Clayton County, and South Atlanta, South Fulton County. In fact, even in some higher-end submarkets in the suburban areas, occupancy rates aren't much better. The only suburban submarkets with occupancy rates above 93% are Roswell, Alpharetta, and Chamblee-Dunwoody, part of which, of course, actually falls inside the perimeter. And it's the exact same story when we look at rent change in 2011. Same top 3. Buckhead at 8.7%, Intown, Midtown at 6.6%, and Northwest Atlanta at 5.3%. Most everywhere else, rent growth was around 3% or less. Here are the bottom 5: Outer Atlanta, East Cobb, West Cobb, East DeKalb, and West Gwinnett County. So will the story change much in 2012? Probably not. The big problem for the suburbs is they are absolutely inundated with single-family homes offered for rent, often at very low rates. That's going to make it hard for the apartment market in the suburban areas to have a significant bounce back. So we're expecting much of the same for 2012. Look for strength in the urban core inside the perimeter and continued weakness outside of it. And that wraps up for Atlanta. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.